Well, thank you everybody for coming again. My name is Josh Laraby, and I'm with Fairfield Economic Development Association. We're a partner in the community that focuses on growing the local economy. And we focus on growth opportunities for Fairfield and Jefferson County, and also working on any growth hurdles that our area has. This is Brian Ziegler again. He's with Indian Hills and the Small Business Development Center based in Ottumwa. I've been in Fairfield for 7 years, and Brian, you've been here?
Actually, 32 years.
32 years.
So you've got a ways to go.
Working on it. So thank you all for coming. We don't have a slideshow. We really wanted to have a conversation with you today, and we wanted to learn a little bit about what projects or sectors you're interested in, and then start there. And then talk a little bit about local financing opportunities for your small business. A lot of people in Fairfield are in what I call discovery phase. So a lot of ideas, a lot of great ideas. And you'll find out through the series of workshops and today that there's a good network of people to support you, including Brian, these workshops, our economic development office. Maybe we'll start off, Brian, with talking about some of the local financing opportunities outside of traditional financing, but also these resources pair well with traditional financing. And so, Brian, maybe we want to start talking about those.
Yeah. There's really several local programs, which is always exciting because, there's the traditional things, the bank, the money you have, but anymore, local programs have become a major contributing factor to business startup and financing for business startups. So it's an excellent concept. One of the ones that I'm involved with is a program out of the Area 15 Regional Planning in Ottumwa, and we can get you that website information, but it's the READY loan, and it involves kind of two components of it. One is for job creation in a little bit larger industry situations, but then the other part of it is for people that are doing more of a self-employment activity and don't maybe have the credit score or the down payment money that is necessary. And that loan goes up to $30,000 now. I'll mention that one, and then I'll mention this one other one. The state of Iowa has a program called Iowa Microloan, which is for a statewide business startup. It's not my favorite, but sometimes it's one of those ones where you just have to do what you got to do to get started, and it goes up to $50,000. The downside of it is the interest rate's a little higher, like 8-9%, but sometimes that's okay. And we could, I can help you justify a higher rate of interest. That sounds a little weird, but sometimes it's not about the interest rate, it's about getting the deal started that's more important. And with that, why don't you go back to the Fairfield and the Pathfinder?
Okay, and I'll make one comment on the Iowa Microloan program. Is one of the nice things is that program, which is this area is a little bit more difficult to find resources for, but they will allow and take a look at funding some operations for your business. A lot of the microloan programs or the banks, they want to give loans for capital investments, material things like computers, machinery equipment, things like that. But the Iowa Microloan will also take a look at, hey, I need some startup capital to pay some of my staff. So that is a really nice opportunity. And then there's one other revolving loan fund, and sometimes you'll hear RLF. And so if you hear RLF, that means a revolving loan fund. And that's usually a nonprofit organization that has a loan program. And Pathfinder's Resource Conservation and Development, you actually have a handout. I don't know if I brought enough looking at the audience numbers here, but please let me know if you didn't get the handout. But they have a low interest loan that you can borrow up to $20,000 at usually somewhere around 4% interest, depending on where prime is. And they can amortize that 5, 7, or 10 years. And that's a really nice program based out of Fairfield also. And all these loan programs that we'll mention and talk about today, the banks and credit unions are fairly familiar with them. And they actually like to work with these programs because they're sharing a little bit of skin in the game. And so they're familiar with them. And if they're not, we can do some education, and the programs have some credibility. So that's a theme throughout these revolving loan funds is they like partners. Nobody wants to hold all the risk, the banks or yourself, in a venture. So they all usually work well together.
And probably from that, let's talk a little bit about the SBA programs. And a lot of times I'm the one that's associated with that because my program, the thing that I'm involved with, is just a Small Business Development Center, is funded in part by SBA. So it's natural
What
that
is SBA?
let's do that. Good point. Well, you're quick on this. Small Business Administration, and that's a federal government program. And actually, Small Business Administration has been in business since 1953. So it's kind of amazing how it didn't exist, and all of a sudden it existed, and it's lasted that long. But so yeah, I'm associated with the SBA that way, and therefore what I do, I'm funded by the SBA, the state of Iowa, and Indian Hills, so I provide services to you at no cost. And just to mention that just a little bit, that means that I can meet with you anytime, any location, by appointment. I shouldn't say just anytime, but and that can be here in Fairfield. And a lot of times I meet people at Josh's office, the CoLab, or Indian Hills' Education Center. So it really works out great to come here and meet. If I come here, I like to meet with like 3 or 4 people in one trip. So let's get with it. Let's meet. Let's do some things. But the SBA is a kind of a good program through the bank. It's not a direct loan from SBA, but the main thing is the guaranteed loan to the bank. You borrow the money from the bank, but the SBA guarantees it to the bank. And there's a separate application that you have to fill out, but the application always is funneled through the bank. And I say it this way, the main advantage of that is for you, it guarantees to the bank, but the main advantage to you is lower interest, longer life of loan, meaning lower monthly payments, and lower down payment requirement. And that's always a huge issue when you're financing a business, is the down payment requirements that you might face. Some of the loan programs we mentioned really don't have down payments, but the SBA program does have that. And then we have another one in the SBA called 504, which is more for buildings and machinery and those kinds of things. And it gives you a very favorable interest rate that is a long-term fixed rate. And that involves the bank, a 504 development company, and the SBA. So there's several players in that, but when that all happens, it's a excellent source of financing with a reasonable down payment requirement. So those are the 2 SBA programs that I'm involved with quite a bit.
So a lot of information is going to come at you, and we're trying to just give the surface level, but if you ever want to revisit on these or circle around, reach out to Brian and I, and we can help you kind of filter through which program might be the best fit, or a couple of the programs that might pair well together for your project and your venture. So Brian, we've met a couple of times together with some entrepreneurs. And oftentimes we usually don't start talking about initially with the revolving loan fund programs or the SBA loans. The conversation often starts with, start within your friends and family and see if you can borrow there. I only brought a couple of copies. It was a 15-page document, but it was a personal loan agreement. And Brian is an expert in this area. And so if you have one of these personal loan agreements, I can get you a digital copy if you let me know before you leave. And if you could pass that around just so a couple of people could see that. But Brian, you want to talk about why you start there and the benefits of that?
That is always a good concept, and it's hard to do, but it's doable. It's done all the time. The issue is this: a lot of times, the bank will say, or the SBA will say, well, we need 20%, 30% down payment. And a lot of times the people that I'm talking to that come to talk to me will say, I don't have it. I don't have that cash. Well, let's not stop the conversation there. We keep going. That's not a roadblock, okay? Keep going. The next thing is, do you have assets that we can borrow against for that down payment? The next thing beyond that then is borrowing money privately from third-party people. And usually we say this is people that you have an acquaintance base with. But think of it this way. Acquaintance means look at all the contact lists on your cell phone and take that to the next step. All of those, say 500 people on your cell phone, have 500 people on their cell phone. Do the math and you'll get the idea that you probably know everybody in Fairfield, and maybe in a larger area than that. But here's the deal. we don't care where people are at. If you've got an uncle or aunt in East Coast, West Coast, money can be shipped. They can send money. That's no problem. So we don't care where people are at. And then the idea here is we're not asking for a gift, but I like to propose that it's a loan. At least it's a loan in the beginning. Loans mean you pay it back. Loan means that they don't own you. They're not an investor. They're not a partner. You are the business, and they can loan you the money. Now, in a loan situation, in a financing situation, the bank is going to say, well, that needs to be, that can't be borrowed money. Well, it almost sounds like you're trying to have it both ways here. You borrow the money privately, but you can use it then as equity, or you present it as equity on your proposal, and the loan from the bank or the SBA is going to have priority on repayment and collateral position. As long as you have those in place, then you can use private money. And I say it this way too with people that, for one thing, you can borrow 100% of the project this way. You don't have to do, like 30% this way and 70% from the bank. You can borrow 100%. And you got to think of it this way. And I hope there's nobody from the banking industry in here. If not,
if you are.
If not, I'm going to say it anyway, okay? See, here's what the banks are doing. They're taking people's money that's in checking account deposits or CDs and paying out 1% interest. They're taking that money and reloaning it to the borrowers at 5 or 6% interest. That's their game. That's the way they fund their whole operations, the gap between what they pay and what they charge on interest rates. So, now the question is there money in the banks that people have that could be pulled out to some extent and loaned to you privately? Well, yes, there is. And I always say it this way: if you look at the bank's balance sheets, which any bank in the United States has to publish or disclose their balance sheets, you can go to the FDIC website and find that out. We have a bank over in Ottumwa. South Ottumwa Savings Bank has $350 million of deposits in their bank. That's savings accounts, checking accounts, and CDs. $350 million. Say that. $350 million. And so what's wrong with some of those people that have that money in the bank pulling a little bit of that out and helping finance local business projects? In my opinion, absolutely nothing wrong with that. Now, if I knew somebody that had a $200,000 CD in the bank, would I suggest they pull out the whole thing and loan it to you? That's unreasonable. But how about 10% of it, 20% of it? So it's a diversified deal for them. That's a reasonable concept. And so that's what I work with a lot. And then this agreement that I have is the idea of putting it together so that it's a solid deal. I always say approach somebody with a business plan and this private loan agreement partially filled out with your offer. And what your offer should include is things like maybe a second mortgage on things, maybe second lien. You can do UCC filings. You can offer life insurance and disability insurance. You can create a pretty decent agreement that puts some teeth into the deal so that they are more likely to loan you the money. So that's all that, how all that plays out. And why don't I talk a little bit about personal financing? Because here's the issue that comes to me all the time in my office with situations is, we'll start talking, and one of the questions I have to ask, which I wish I wouldn't have to ask, but I always have to ask, is what's your credit score? How you doing? Well, a lot of times that's not good. So my thinking is if you're working on this topic, check your credit score. A lot of times there's stuff on your credit score or credit report that's wrong. Maybe we need to fix that first. Problem is that takes time, and a lot of times you don't have time, but let's fix it. The other thing that I really try to work with people on is your balance sheet. So if you've never done a balance sheet, and all of a sudden you're talking about business financing, well, you can't disconnect from personal to business at this point. Maybe eventually you can, but at this point you're going to be tied together. And so we want to look at where your personal balance sheet is and how that's looking. Is there equity on the balance sheet? Is there been growth in value over time on your personal balance sheet? So those are kind of two things that I tend to have to talk a lot about because it does relate to your capacity to get the financing.
Brian, what's the range of experience that comes to you, meaning folks who are looking to start a business? Is it a wide range? Are you typically working with folks kind of in discovery or seed phase? Are you also working with folks who have started a couple of businesses and maybe they want to learn the next best practice to grow to the next level?
And yeah, the answer is all of the above.
Okay. Yes.
Yes,
I knew the answer.
Yeah.
So.
I can help you on the startup, but one of my neater clients that I've worked with, we've been through like 3 rounds of financing, and they seem to be about 8 to 10 years apart. So I've been involved with them for quite a while, and each one is a little bigger dollar amount. Each one is a better deal. It's like, so it doesn't matter. And the one thing that I would like to kind of lay out there too is that one issue it's interesting to think about instead of starting a business is to buy an existing business. Buying an existing business is always easier to finance than a startup. So it's kind of neat. You think about that. Always easier to finance than a startup. And maybe you can't find a business that's exactly like you want to do. You got something that's maybe unique or special. That's okay. Sometimes even in those situations, I say buy some basic business and use that as your base to then expand into what you want to do. So you can still get there, but that's always true. Buying an existing business is easier to finance than a startup.
You want to talk a little bit about financial projections?
Yeah.
And the importance so before we're going out for financing,
Yes.
kind of know where we are, or
You want to pull that?
Yep,
That up?
I'll pull it up here.
One of the issues that we always face then is okay, identify the mix of the financing package. What are you going to, how much money do you need, the total budget, and then where's it going to come from? And really the determination of the total budget is really difficult, and sometimes we have to work through several different scenarios of that before we actually kind of figure it all out. And it can vary. And a lot of times when I'm talking to people, I'm dealing with that issue of do I need $5,000 working capital or $50,000 working capital? But that's what we kind of begin with something and then try to go back and support that or change it as time goes on. This is something that I use frequently with either existing businesses or new business startups. It's just an Excel spreadsheet projection. If you're going to do any loan application or any communication with anybody, even a private person, you need to really sit down and have this document done. And even if you're not obtaining financing, it's good to go through this exercise to answer the question, is it worthwhile for me to do this? And a lot of times I even say it this way, if you're giving up a paycheck or walking away from a job, it's like, do you ever take a job without asking, what do you pay? Well, no, of course you do. You ask what you pay. Well, if you're self-employed, you should ask yourself what you're going to pay yourself. That's what this gets into, is that question. So the top part of the very part there was the balance sheet information. It's where the money's going to be spent. That's cash, inventory, equipment, building. Down below we have liabilities and the bank loans, and then we have equity. Those two numbers have to balance. The total of 291 and total 291 have to balance because the balance sheet has to balance. So that generates a balance sheet. And then basically what's going on here, I'm filling out numbers in these rectangular boxes. And then right there is the income and the expense categories as far as how I'm going to budget for that. And I'm not going to get into much detail here today, but then let's go to the income tab at the bottom. So then from all that information, this produces an income statement. And why don't you slide to the top? Thank you, Josh. So this is a projected income statement. It's first year, second year, third year, with a second column there is percent of expense as a percent of revenue. So what happens here, the data tab is the input tab. The other tabs are output tabs. But it's incredible how quickly we can get at this concept of a projection by using this kind of format. This is one that I use, but there's others out there, of course. But this is crucial. Sit down with this, and I can help you with it, or you can sit down with it on your own. But you work through the numbers, and the question is, is it going to work out? Is it profitable? Can I make my loan payments? Is the things that we're looking at there.
So thank you for putting this together.
Yes.
I mean, this is kind of where a lot of people get stuck, is they don't know how to get the numbers they need. And you've got a nice structure to sit down with people and kind of just plug those numbers in fairly quickly, or at least through a couple of conversations.
Yeah, I can probably do the first draft of this in like 10 minutes, if I'm with you to discuss some of the questions. And I always tell people, if you don't know the answers, I'm gonna have an answer. It's probably gonna be a guess, okay? But guessing is okay for a while. Eventually that has to be confirmed, but guessing is good for a little bit of time on this.
There's a lady by the name of Tara Johnson. You may have heard of a whey protein product called Tara's Whey. Have you heard of that? The lady who's founded that has grown her business successfully, and now she owns a nonprofit called the Food Finance Institute, and she is a consultant for food manufacturing companies, value add companies in the food sector. And we're very excited. She's willing to come to Fairfield as long as we can get 10 participants or 10 class students. And it's going to be over, 4 days. Let me get down to the schedule here. But it'll be 4 days. So as you can see here on the slide, day one is going to be optimizing your business model. Tara has national brand experience. So she started an idea and growing her company to becoming a national brand, which you see in all major food chain stores now. So we haven't officially released this. That's why I didn't print this for you, but I definitely want to mention it. If you're interested in this area, make sure to reach out to me if you don't see this online in the next couple of weeks. But it takes a look at really shaking up your model. If you're wanting to grow to the next level, whether you're in discovery phase or you're doing some production, and you really want to grow to the next level, Tara is just a powerhouse that we're really excited to work with. So if you're interested in this, let me know. And it'll be broken up, like I said, over 4 days, April 9th and 10th, full days, and then take a little bit of break, and then May 7th and 8th. So that'll be held here in Fairfield. And if you're interested in that area, make sure to reach out to me. So I'll tell you a little bit about SCORE. And what SCORE stands for is Senior Corps of Retired Executives. It's a nonprofit national organization. There's a chapter in Ottumwa, and we have opened up a Fairfield branch of SCORE, and we're currently building a mentorship base here in Fairfield. There's myself and also a gentleman named Dennis Rowland. And then we have a few other people who are looking at becoming mentors. But if you just type in SCORE, Ottumwa, you'll find the chapter called South Central SCORE. And you just go to the website and you can request a free mentorship, and then it'll have a selection of what area of mentorship you're looking for: financing, business structure, business plan writing. So definitely look at that. It's a national organization. It's completely free. It's a partner of the SBA. And so they're another resource. So we're all kind of doing the same thing, and we're trying to work together as close as possible. So Brian works closely with SCORE. Sometimes he'll consult and mentor with an entrepreneur, and then he'll recommend them on to SCORE and vice versa. So yeah, I'm excited they put up this banner here today. And so they cover all areas. And so now, even though the name is Senior Corps of Retired Executives, it was originally founded with retired executives who wanted to give back. But now there's folks who are current business owners who are donating and providing service for free mentorship under the SCORE organization. There's folks like myself in economic development or Chamber of Commerce's. And so definitely check that out. So we want to make sure everyone gets out on time. Brian and I will definitely be around for a few minutes. We've got 5 minutes or so left. And any other questions? Definitely reach out to us. We talked a little bit about personal loans, some local revolving loan funds, larger investments, venture capital and angel investors. So a lot of information, and some of it's new, and there's more depth to, I think, all the areas that we brushed on. So definitely use us as a resource, and let us know if you have any questions. All right, thank you.